Hey there, my name's Curtis Lucas, and you're watching Empire Building. In this episode, I wanted to talk about a lesser-known Bitcoin mining company, Bitfarms, because it's painfully obvious that when compared to its peers, it is extraordinarily undervalued, especially when you consider that it has the highest installed hash rate capacity than any of the other publicly traded companies other than BitDigital, but like I said before, I ain't touching that one with a 10-foot pole. I know that investors in Bitfarms had a particularly difficult time today, seeing as how its stock was actually halted after dropping nearly 23%. This is another company like Mara that has attracted the institutional investor class. They recently announced a $20 million capital raise using institutional investors from the United States. The company sold 5.5 million shares at $3.58 per share. And as usual, these institutional investors got a discount at the time from what the stock was trading at when this deal was made. Well, guess what the price closed at on January 20th, today, when the market closed? $3.55. So it's always a good deal when you can pick it up for the same price that the institutional investors just bought it for. The thing that excites me about this company is that it has the highest installed hash rate capacity, as I mentioned before. Again, I'm not including BitDigital. If there's anyone out there wondering why I'm not including BitDigital in this, then you may want to check either of the two videos that I did covering that topic and some of the issues that I found when I investigated that company. Not to mention the video where I reviewed the report issued by the short seller, J Capital. But getting back to Bitfarm, at the end of 2020, like I said, they had an installed hash rate capacity of 965 petahash per second. By the end of the first quarter of 2021, they expect to increase that to 1,205 petahash per second. The thing that gets me excited about this company is it is one of the first publicly traded companies in this space that is going to be able to show how profitable these companies can be on paper. They were able to scale up much quicker. And while in the long term they're not going to grow as quickly as Mara or Riot, they do stand to benefit from the fact that they've already been mining all this time. They have the Bitcoin, but they don't benefit from the same level of exposure as our American counterparts. Hive, Hut, Bitfarms, and even Argo blockchain all suffer from the same problem of not being able to access the largest market of investors, which is in the United States. They all do trade on the OTC market, but the liquidity there is just not very adequate. But as I've seen it before, value is value, and investors will eventually find it. And you stand to benefit from that as long as you're in there first. In these videos, I often do price forecasts for PE ratios based on future earnings. This helps us get an idea of how these companies might be evaluated once they start showing profit. Well, Bitfarm has been mining pretty heavily into the close of 2020, while Bitcoin was ripping. And based on the data they provided and my own calculations, I estimate that their cost of electricity is probably somewhere around 3 cents a kilowatt hour, which is extremely competitive in this market. Based on that and the power consumption that they've published, as well as their maximum hash rate capacity, I estimated that Bitfarm would produce approximately $5.3 million a month worth of Bitcoin. But that's at today's prices. So I went back to the close of 2020 and took the Bitcoin price at $29,000, which puts the estimated monthly profit at $4.17 million. Multiply that over the entire quarter, and you're left with $12.51 million total profit. Now, from that, we also have to subtract any operating expenses that doesn't have to do with the power consumption, because that has already been accounted for. So just to be conservative, I took about $2.5 million and just estimate the final profit net at around $10 million for the quarter. With this, I can calculate the earnings per share by dividing by the 87 million shares outstanding. This gets us an EPS, or earnings per share, of 58 cents per share. Now that 58 cents is on an annual basis, but that's what I need in order to calculate what the target value of the stock price might be, assuming a modest PE ratio, as I've done many times before, of something like 20. Applying that, you get a stock price of $11.60. And here's the thing, we don't have to wait for miners that haven't even been manufactured yet to arrive and be installed and actually start hashing. This has already been happening the entire quarter. So for the first time, we're going to be able to see this on paper, and we'll see how the market responds to that. Now, I don't have any information as to when these results will be published, but we can expect it shouldn't take too much longer. But the bottom line here is that Bitfarm has a market capitalization of about $300 million. They've got a total power capacity of 69 megawatts, currently hashing. When you compare that to Hive Blockchain, who's got a market cap 3 times what Bitfarm's is, Hive caps out at 51 megawatts. That's a huge discount. And Hut actually has slightly more hash rate capacity at 131 petahash per second. But their installed power capacity is 104 megawatts. But this is because Hut is not quite as efficient with their miners as Bitfarms is. Hut's market cap is $510 million. So you might be asking yourself, if this thing is trading at such a big discount, maybe there's a reason for that. And you might have a point there. Recently, the company announced that one of its co-founders would be resigning. Bitfarms, a Canadian publicly listed Bitcoin mining operation, announces that effective immediately, Matthew Vachon has resigned as a chief information officer and a director of the company for personal reasons unrelated to the company. The announcement goes on to thank him for his service and wish him well in his future endeavors and blah, 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 blah. Whenever a co-founder of a company leaves the company, there are a lot of conclusions that one can make. The truth is, this happens all the time. But in this situation, in this business, what I choose to look at is the fact that no matter who comes or goes, those miners are still hashing, and that Bitcoin is still being minted. Maybe he left for personal reasons. Maybe there's more to it than that. But I fail to see any outcome that would result in them losing revenue, which is really all that matters. Having said all of that, I obviously don't have enough conviction that I would go all in on something like this. But I did decide to take up a $35,000 position in the company. And if I'm right, and we do see a 3-fold increase in short order, then I've just tripled my money. I'm not saying that definitely will happen, but this is the first opportunity that we're getting to test out this theory. The theory being, what will the market decide is an adequate PE ratio for these companies once they start to show a profit? Unfortunately, this might not be such a fair fight because it's not listed directly on the US exchange. But I've seen these Canadian stocks move just as fast, if not faster, than their American counterparts. Something just needs to shake loose before that happens. Another Bitcoin mining company, very much like Bitfarms, is Argo Blockchain, also substantially undervalued compared to its peers, even when compared to Hut and Hive, like I just mentioned. Argo Blockchain has slightly less installed hash rate capacity, but they're actually expanding that as we speak with new miners that were just delivered, and they expect to have those fully installed by next week, at which point they'll be almost the same size as Bitfarms, and will also be expanding alongside Bitfarms so that by the end of the first quarter of 2021, both will be just over 1200 petahash per second. But Argo Blockchain has the added bonus of utilizing the S19 Pro miners, so their cost to mine one Bitcoin is actually less than Bitfarms or Hut or even Hive. But in the long run, I still think that it's the biggest players who are going to reap most of the rewards. And nobody in this space is growing faster than Mara is. The problem is Mara is starting from the back of the pack. But 12 months from now, they'll be way in the lead. And at this point, it will be very difficult for anyone else to catch them. But in the short term, I'm still going to go where I see value. So I hope this helps explain my mentality when I'm looking at these companies and how I try to evaluate them for value. I know it can be very difficult to focus on these things when the stocks are falling the way that they are. If you're someone who's built your position some time ago and are simply buying and holding, then you're doing exactly the right thing. But if you're someone who's still trying to enter these positions, now is a pretty good time to be doing that. I don't know exactly when we'll be bottoming out, but buying into fear is exactly what you need to be doing. Just continue to cost average and you'll be just fine. But that's all for this one. Now let's get back to empire building. Bye.